Australian Ethical conducted research among financial investors on responsible investing, and they say we're in for a new era of investing. To get us across the detail, Leah Willis, the head of distribution for Australian Ethical. Leah, welcome to the program. Nice to see you there. So who exactly was it that Australian Ethical was speaking to, and under what pretext?
So we have commissioned research with Investment Trends. We were the major sponsor for the ESG survey, their first one that they launched in the market last year, and we've redone the survey again. It really is a pulse check on investors, their demands and their perceptions and their concerns around responsible investing, but also advisors. And that was, I guess, some of the really pleasing stuff that came out of the report. We have known in the past that responsible investing is largely an investor-led trend or theme, and it has been in the past. We now know that 75% of investors are either investing this way or interested and want to learn more in the next 12 months. But the most pleasing thing was advisors. Now 1 in 2 or 49% of advisors are actually engaging in RI. And that's up from sort of 1 in 5 a few years ago. So advisors have caught up with the trend and they are engaging in more client conversations, which is great to see.
How do you think that's happened? Is that purely because retail investors are pushing their advisors to go and get them these options, or has there been a concerted sort of effort to educate advisors or a push from within?
I definitely think it's a little bit of a push and a pull. There's no doubt that investor demand, investors leading these conversations and asking to be able to align their investments more with their values, wanting to exclude harmful activities, wanting to actually make a positive contribution and invest towards more impact and contributing to a more positive future. There's no doubt that that has driven advisors to have to engage in the topic. But we're also seeing regulation coming down the pipeline. We've seen the SEC overseas, we've seen Europe, the European landscape around the EU taxonomy, but more recently, as I said, the SEC, ASX and now ASIC all coming out and talking around guidelines of engaging in this and engaging it in a really thoughtful way to avoid greenwashing and to ensure that investors know exactly how they're aligning their investments with their values. So definitely regulation is pushing as well. And I think advisors in this report told us that those ones that are engaging in ESG and having those conversations with their clients are finding that it's adding to the engagement that their clients have with their long-term investments, but also adding to their value proposition. So certainly some business benefits to advisors engaging in these conversations.
Leah, I think it's probably safe to say that ESG, a lot of ethical funds have had a pretty tough trot over the course of this calendar year. A lot of asset classes have. What do you think that will go and have longer term impact on the sector? Will that go and maybe lessen demand in the short term?
Potentially. I mean, like with all markets, there's going to be ups and downs and short-term market volatility, and this year is a little bit unforeseen in terms of what we're seeing in terms of Ukraine, and then also the global energy crisis that's sort of arisen out of that, as well as inflation and interest rates, obviously all having an impact on market sentiment at the moment. Does it actually impact the long-term demand for ESG? I don't think so, and that is because if you have a look at the Australian marketplace, the enormous transition that we have to make as an economy, individual companies, entire industries and communities will need to transition towards net zero more rapidly than ever before. We saw in the recent election, voters, I guess, voting with their feet with that overwhelming support of the Teal campaign. And we think that there is only more momentum in particularly around the climate emergency and what needs to be done to transition industries. There will be more opportunity to be able to invest in a more positive way. And we think investors will continue to seek out these sorts of investments.
Okay, so what did this survey sort of indicate what's to come next for, say, the advisor component of this whole push to responsible investing?
Well, we think that, so we know definitely that the current ESG investors are around 33%. They're investing in some kind of responsible way, but another 42% wanted to invest this way. They actually want to understand more, and they'd like to be able to look at these investments in the next 12 months. So that was another 42%. We called that throughout this report the next wave of investors, and I think that is the demand coming down the pipe for advisors. So how they lean into that, how they, anticipate that and start leading the conversations will be key. I think also the level of conversation and interest. So investors in this survey told us that they were particularly interested in things like ocean conservation, preventing climate change, carbon emissions, but also things like having a positive impact and being able to invest in renewable energy or sustainable agricultural practices. So it will be the domain of the advisor to help these investors navigate the options in the marketplace and be able to actually truly align what they're seeking out with their investments with the products that the advisors are recommending. And we know that investors seek out advice whenever they don't feel that they can navigate something themselves or invest directly. And we know that there's a level of complexity around the labels in responsible investing. So advisors definitely have an opportunity and a leadership position to be able to help navigate investors through these options.